I'm going to do a quick recap in this video. It looks like pretty much everything I've been expecting is starting to fall into place. So we've got a swing low in the dollar. This was yesterday's chart, but we've got some follow through again today. The dollar has moved above the 10-day moving average, and the 10-day moving average is starting to turn up. So this is exactly as I said. This is not a new daily cycle that still had another 10 or 15 days to run. This is one really long daily cycle. This was a bounce out of a half cycle low, and this is I'm about 90% sure that this is a final intermediate cycle low. I don't believe this is going to be a yearly cycle low because I think the dollar's probably started to rear market. So I think we're going to rally for 6 to 8 weeks and then roll over and then make another lower intermediate low later in the year, maybe in November or December, somewhere in there. But I'm positive I'm correct on this. As I said, this was not a separate daily cycle. This was just a very long daily cycle here, bounce out of a half cycle low. Just most cycle analysts have mental block. They've set themselves into a time frame where they've got an expectation for when a cycle has to bottom, and those old cycle lengths just don't work in our modern markets anymore. Not with all the currency interventions, stock market interventions. It just those old timing bands are evolving. They're becoming longer than they used to be. So it's kind of like the Elliott wave practitioners. They've got an expectation for what has to happen, and so if it doesn't happen on a daily time frame, then they go down to an hourly time frame or a 30-minute time frame or whatever they have to do to squint hard enough to see what they want to see. It's kind of the same thing with many of the cycle analysts today. They're locked into those old time frames that really no longer work anymore, and so then they come up with excuses for why the market has to bottom in that time frame. A stealth daily cycle low or a stealth ICL. Folks, there's no such thing as a stealth cycle low. Cycles have to move down far enough to shift sentiment. A stealth cycle low does nothing to shift sentiment, so there's no such thing as a stealth cycle low. So to recap here, I'm pretty sure we've got a final intermediate cycle low in the dollar, and that would mean we've got probably a final intermediate cycle top in the euro. And this again is another example of why you have to look at more than just one chart, especially in the dollar, and you have to rid yourself of the old expectations of cycle lengths that used to work years ago. These don't work anymore. Clearly this dip right here in the euro was way too small and way too shallow to be a daily cycle low. This was a move into a half cycle low, and if that's the case, then that pop in the dollar could not have been a move out of a daily cycle low. This is a half cycle low. The rally in the dollar back in May could not have been a daily cycle low. So this is another example of the correct way to use cycles. So if the dollar has formed its final yearly cycle low, then or intermediate cycle low, then this is an intermediate cycle top in the euro. And I showed a chart several days ago. I think it was a chart of the day that showed that the euro had pushed right up into resistance between that 113 and 114 zone, which was a potential spot for a top to occur. And now I'm pretty sure that is what's happened. And so if that is correct, and I'm pretty sure it is, that the dollar has formed an intermediate cycle bottom, then gold has formed an intermediate cycle top. I've warned and warned people that this was not an intermediate cycle low, that none of the DNA markers of an intermediate cycle low occurred at this drop. There was no ABC correction. There was no failed daily cycle. So this was not an intermediate cycle low. And I'm going to tell you right now, this push right here, on the gold chart, you can see we eclipsed this April top by just a couple of dollars, I think it was. This is a manufactured move, and I've warned people before that this kind of stuff happens. The banks create these kind of moves in order for them to get positioned for the trend changes. So they manufacture just enough of a rally to at least break this this top that gets everybody bullish. And you all saw the comments on the blog. Gold was going to 1400, and I'll show you the mining chart here in just a second. And that this is what they do. They manufacture these kind of moves to get retail traders and hedge funds to buy, and that allows the big money, the smart money, the banks, to sell into that buying. They can sell big positions into that buying panic as retail traders and hedge funds are tricked into the wrong side of the market at the top. And so, a big clue that the gold market was, not ready for a big rally was that the dollar was making much lower lows, and gold was only able to just make a very marginal breakout and then immediately reversed. That was a warning sign that an intermediate top was brewing. Now moving on to the chart of the mining stocks, you can see we've got that same pattern. This move right here, this big rally back on Tuesday, was completely uncharacteristic of what was happening here. The miners were not following gold higher, and then all of a sudden, out of the blue, in one day we get a big move up. You can almost bet the farm that is a false move created by the banks to get everybody bullish, cause people to buy. That allows the banks to use that big volume to enter very large short positions and then get positioned for the move down. So when you see something like this that was very uncharacteristic, a complete reversal of the previous pattern, and then also occurring deep into a cycle low, like I said, you can almost bet the farm that is a false move, and it's created to get people to buy at the wrong time. So I'm pretty sure again that this was a top, and if the dollar has formed an intermediate bottom, which I'm pretty sure it has, even if it's just going to be a bear market rally, which I suspect it will be, it should still rally for 6 to 8 weeks. So I'm going to say we've got 6 to 8 weeks before the metals find their intermediate bottom. And it's been my expectation all along that the banks are going to try to break this December low in the mining stocks, and that'll be basically it'll be the exact opposite strategy as what occurred on Tuesday, where the banks create this rally to get people to buy so that they can load up on their shorts. They're going to try and do the exact opposite at the bottom, probably sometime in July, maybe even into late July, depending on how long the dollar rallies. I think they're going to try and break this December low to get everyone to sell at the exact wrong time, and that will allow them to load up huge positions right at the bottom of the intermediate cycle. And then I expect this next rally into the end of the year is going to be a monster rally, much bigger than this intermediate rally right here, because I think this rally is the one where gold breaks out of the basing pattern, and then we take off to the upside, and we get a recognition phase that that there's, at that point there's no more denying that gold is in a bull market. So I think that recognition phase is coming in the fall of this year, But before it happens, we've got to have an intermediate cycle decline, and I think the banks will probably succeed in breaking this December low, getting everybody on the wrong side of the market, and then so that they can load up their positions in preparation for what I think is going to be a big rally into the fall. And by big, I think that once they take the miners down and break this December low, I think we reverse, and by, let's say, the end of the year or the beginning of next year, I think we could test this this breakdown zone right here at $37 on GDX. So I think we could have quite a spectacular move into the beginning of next year, from the bottom in probably in July or maybe even early August at the latest, to a top that could easily test this this breakdown zone here at $37.